Assalamu alaikum wa rahmatullahi wa barakatuh. In the name of Allah, the most gracious, the most merciful, praise be to Allah, and peace be upon His Prophet Muhammad, his family, friends, and followers until the day of judgment. Inshallah, we are going to explain today retained earnings. Retained earnings. As you know, and we mentioned many times, retained earnings is net income that a corporation retains in the business. Retained earnings is net income that a corporation retains in the business. And when we retain this net income, we make the journal entry at the end of the period. Income summary, debit, retained earnings credit. As you know, retained earnings by nature is credit. So when the company has net profit, in other words, revenues exceed expenses, then we make profit or net income. Then income summary will be debit and the retained earnings credit. Then the journal entry would be income summary, retained earnings. And the vice versa, if the company has net loss, then retained earnings will be debit and the income summary will be credit if we achieve losses. Okay, losses here in the retained earnings, we call it deficit. D-E-F-I-C-I-T, deficit. Deficit, it means we make losses. This is deficit, and this deficit not close to paid in capital account. This one, the deficit not close to paid in capital accounts. So this is how retained earnings start. We start with the journal entry, as I said. Then I told you before that we can prepare the retained earnings statement. This is after we prepare the income statement and before prepare the balance sheet. This is the middle. So we should prepare retained earnings in the middle between income statement and balance sheet. For retained earnings statement, we have the headings first, the name of the company, the name of the statement, retained earnings, and it is for a period. And then we have the first part as retained earnings at the beginning of the year. Add net income and deduct or less any dividends. Then it gives us retained earnings at the end of the year, and it is the one it will appear in the balance sheet. In the balance sheet, retained earnings, it is a part of stockholders' equity. It is the second main item in the stockholders' equity. The first one is paid in capital. The second one is retained earnings. So it is very easy to prepare it. then there is some changes. It might be happens during the year, and it will affect the retained earnings. So if we have debit side and the credit side, and we would like to know the retained earnings changes, then in the debit side we start with net loss. On the other hand, in the credit side we have net income. So net loss in the debit side and or net income in the credit side. And then we add in the credit side period adjustments. Period adjustments for understatement of net income. In the other side, in the debit side, we have period adjustments for overstatement of net income. Overstatement of net income. Then in the debit side, the third item, the third one is net losses. The first one net losses. Second one period adjustment for overstatement of net income. The third one cash dividends. Then stock dividends. Then we have some disposal of treasury stock in case of there is no balance. There is no balance in the account paid in capital from treasury stock. If there is no balance in this account, or it is not enough balance, then in the account paid in capital from treasury stock. Then in case of some disposal of treasury stock, it appears in the debit side. Again, in case of no balance for paid in capital from treasury stock, or there is no enough balance in the paid in capital from treasury stock account. In these two cases, there is no balance or enough balance of paid in capital from treasury stock, then the disposal of treasury stock, it arises here in the debit side of retained earnings. Then in the credit side, we mentioned first net income, second period adjustments from understatement of net income. Again, in the credit side, we have net income first, then period adjustments for understatement of net income. This in the credit side. So these are the changes which might be happen in the retained earnings account or statement. Okay. Then we mentioned that in the second line, both sides, we have period adjustments. Again, we have period adjustment. Then these are the changes in retained earnings. Then retained earnings, where we see it, or it appears where it appears under stock holders equity in the balance sheet, and as I said, this is the second main item after paid in capital. After paid in capital, this is number one. Then number two, retained earnings or deficit, if it is deficit, retained earnings or deficit, and this one, it is deduct from common stock. Then we have total stockholders equity. Total stockholders equity. This is how to appear in the balance sheet. Then there are in the balance sheet, there are some restrictions for retained earnings. Retained earnings is not available for dividends. There are some restrictions to make it is not available for dividends. What are these restrictions? What are these restrictions? These restrictions, there are three of them. Number one, legal restrictions, and number two, contractual restrictions. Number three, voluntary restriction. Then we go back to this restriction. We start with the legal one. Legal restriction, it is a restriction for the cost of treasury stock until it's sold. يبقى the restriction which we call it legal restriction, it is for the cost of the treasury stock until it's sold. This restriction, it lasts with us until it's sold. The second one, or second restriction, is contractual restrictions. Contractual restrictions, it is long-term debt may restricted retained earnings as a condition for the loan. Again, this one, contractual restriction, it means long-term debt may restrict retained earnings as a condition of the loan. As a condition of the loan. The third type of restrictions is voluntary restrictions. It is like future plans, future plans. Anyway, the third restriction again is voluntary restriction. For example, if we have a future plan expansion, then we can again the three restrictions: legal one, contractual one, and the voluntary one. This restriction, however, it appear in the balance sheet. It appears in the balance sheet. To clear the position, if we have any restriction, either this restriction is legal or contractual or voluntary. There is, after the statements, we have notes to the account. It appears in the note to the account. These restrictions, if there is some, it will appear in the retains to the accounts. Then we can explain the part of period adjustment. Period adjustment. Period adjustment is a correction of an error in previously issued financial statements. Again, period adjustment is a correction of an error in previously issued financial statements. The correction is reported in the current year's retained earnings statement as an adjustment of the beginning balance of the retained earnings. This was meant by period adjustment. Okay? The period adjustment, it comes to correct some mistakes in the past. We can correct this one in the net income because we speak about period. not for this year. For this year, we can use the income statement, but we speak about period adjustment. So this period adjustment, for example, if we have understate expense or overstate expense or understate revenue or overstate revenue. Again, we make these adjustments when we have understate expense, overstate expense, understate revenue, or overstate revenue. What is the effect of the understate expense? If we have understate expense, it means we have overstate income. Also, if we have overstate expense, it means that we have understate income. If we have understate revenues, it means we have understate income. If we have overstate revenue, it means we have overstate income. I'll give you a very simple example to discuss it. X company discovers in 2019 that it understated depreciation expense and equipment in 2017 by 50,000. By 50,000. Okay? That's under the state of depreciation expense and equipment by 50,000. Then we make journal entry, adjusting entry. This adjusting entry is retained earnings debit 50,000 because we have understate in depreciation expense. So we should correct it. Then retained earnings will be debit 50,000 and accumulated depreciation equipment 50,000 is credited. Again, to adjust for understatement of depreciation expense in period equipment, the journal entry will be retained earnings 50,000, accumulated depreciation equipment 50,000. Then we correct this, or we make this period adjustment. Then again, if we have understate expense, then it means we have overstate income. If we have overstate expense, it means understate income. If we have understate revenue, we have understate income. If we have overstate revenue, it may have overstate income. Then understate expense means overstate income. It is the opposite. So overstate expense means understate income. But for the corporation, it is in the same direction. I mean, if we have understate revenue, it means that we have understate income. And if we have overstate revenue, it means we have overstate income. So back to changes in retained earnings, which I explained it before. Period adjustment for understatement of net income appears in the credit side of retained earnings, and period adjustment for overstatement of net income appears in the debit side. So we change the understatement of expense and the understatement of revenues and the overstatement of expense and overstatement of revenues to measure the effect in the retained earnings. It would be effect of net income, understatement of net income and overstatement of net income. Okay, this is changes indication for retained earnings change. Then the next step is how to prepare retained earnings. After we studied that we have period adjustment. I explained it before, or in case we haven't any period adjustment, but assume that we have period adjustment under, as I explained before, overstatement of net income or understatement of net income. Then to prepare the retained earnings statement, again, after we have this one, then the name of the company, the name of the statement, the retained earnings for the period ended so and so. Then the first one, balance at the beginning of the period as reported. It means as we received it. We received this balance. It is in the trial balance, or it is given as a balance without trial balance. Anyway, the balance of the as reported or as we have it, then this is the beginning, balance at the beginning of the period. Then we add any correction for understatement of net income. Again, if we have understatement of net income and we make adjusting entries, we add this one to correct the mistake in understatement of net income. But in case we have overstatement of net income, we deduct it. So we deduct the correction for overstatement of net income, and we add the correction for understatement of net income. Then it gives me the balance at the beginning of the period as adjusted. Then we reach the balance of retained earnings the first day of the period as adjusted. Then add net income, add net income, then take away or deduct cash dividends and stock dividends. Cash dividends and stock dividends. Then you have retained earnings balance at the end of the period. This is how to prepare retained earnings statement. Then I think it is enough in the time being, and inshallah you will study more exercises and examples with the assistant very soon inshallah. Thank you very much. Assalamu alaikum wa rahmatullah.